Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this, the 17th day of September 2019. Do like to remind you that I'm the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. We're having a good time now with the exploration companies, some of them breaking through in a very major way. A couple of our sponsors, for example, Great Bear Resources being the most notable one, has really broken out because of a very major discovery in the Red Lake District. But there are others as well. A lot of exciting news now. When we're in a bull market for precious metals, capital is available to go into the ground. Geologists put their theories into test. They test those theories with the drill core. And sometimes when they're right, it can be very explosive. The profits can be very large, and it can be a lot of fun, not like the times when we're in long-term bear markets. So miningstocks.com, go there to sign up for my newsletter. Also, like to encourage you to consider Chen Lin's letter. Go to chenpicks.com for what is Chen buying, what is Chen selling. And as always, we also like to mention olivermsa.com, olivermsa.com, the website of Michael Oliver. And you can learn a lot about how Michael's, his methodology and why it works so well. I think if you go there, a lot of very interesting things there, and especially a market that he thinks is in deep doo-doo, a lot of trouble ahead, and we'll perhaps talk to him about that in a moment. And I want to thank all of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel, and also encourage you to send along your comments to questionsfortaylor@gmail.com, questions4taylor@gmail.com. We do want to thank our sponsors. Because of them, this show is economically viable. Our sponsors for today, Great Bear Resources, Radisson Mining Resources, Novo Resources, and Klondike Gold. I've titled today's show, 20-Year Race, Gold up 487%, Buffett up 386%. David McAlvany, Quinton Henning, and Michael Oliver, my guests for this week. While most investors stay focused on the Dow, one market that listeners to this show watch carefully is engaged in a stealth bull market. It may come as a surprise even to our listeners to learn that gold has actually outperformed the most successful investment manager on the planet, at least over the past 20 years. From 1999 to 2019, as I just mentioned, gold has gained 487% versus 386% for the Berkshire Hathaway Fund. From all appearances, after 6 years of treading water, gold has now broken out into a new gold bull market, and I think the chances are that gold will continue to outperform Berkshire Hathaway. What is gold's recent price explosion telling us with respect to the current market conditions for conventional investments like those that Mr. Buffett has chosen while expressing his disdain for gold? So what is gold telling us about those conventional markets? In the second half of today's show, I want to ask David McAlvany to opine on that issue as well as several others and ask him to talk about his team of advisors at McAlvany Wealth Management and what they are doing in these market conditions. Do they like gold? What are they buying? They're buying conventional stocks like Mr. Buffett, or what are they doing at McAlvany Wealth Management? Dr. Quinton Henning will be with me in the second segment to talk about the innovative ways that Novo Resources is seeking to produce gold from perhaps the most vast unconventional gold deposit in the world. Those are the massive conglomerate beds of Western Australia. Dr. Henning's theory about how gold was laid down in the Witwatersrand deposit in South Africa, the largest gold deposit ever recorded in history. Well, he thinks he's found another one in Western Australia. The question is, and the challenge is, how do you mine this very unconventional project? Well, Dr. Quinton Henning will talk to us today about some of the technologies that are being used, new technologies to address the challenges of this very difficult, or I should say different kind of gold deposit. It is vast, it is massive. If they find out how to mine it profitably, it's going to be huge. And so Novo Resources remains one of my favorite exploration stocks. And right now they've proven there's massive amounts of gold there. The challenge now is, can they get it out profitably? And I think there's some very good signs. So a lot of progress has been made. And Dr. Henning will talk to us about that in the second segment. Well, in these tumultuous markets, it's always good to have a steady foundation to stand on, to not only calm one's nerves, but also to give confidence that we are on the right side of the various markets, of that are most important to us. So, as always, I'm really pleased to tell you that Michael Oliver is with me once again to help calm our nerves and give us confidence that we are on the right side of the markets. Thanks for joining me again, Michael.
Hi, Jay. Good to be back.
Always good to have you with me. And, when I asked you this morning what you would like to talk about, you said something, and I'm quoting your message back to me. You said, quote, panic about various markets' response or non-response to the oil event. Now, I take it by oil event you mean probably the drone strikes on the Saudis' capacity to produce oil over the weekend, but could you elaborate on what your thoughts are about this sort of non-event?
Well, the first thing that hit me about this was a well-known market letter writer, Gartman, who apparently has been long gold for some time. He said in euros why that's different than being in dollars, because you make more money in the euros, but when you convert it back to dollars, you offset the difference that you made in the euro anyway. But he got out of half his position the other day because the gold market wasn't up sufficiently on the war news. And I can't claim to have a documented record of every war instance that has occurred since I've been watching gold, which is 1975 onward as a professional in the gold markets, technically looking at it. But my accumulated wisdom about that is, if you're a trader in gold, don't expect war news to drive gold. And in fact, if gold is in a bear trend, and I do remember a couple instances of this back in the late 70s, it seems to me, where there was some kind of war event that occurred somewhere in the world, with Russia or something else, or the Mideast, and gold spiked up, and it was in a bear trend, though, you could short the war news. Okay? Gold is not here as a war metal. Gold is a money unit. It is man's historical money unit. It is here competing with fiat currencies. Therefore, the issues that affect fiat currencies are things like deficit spending, liquidity provided by central banks, ongoing, negative rates. These are the kind of things that ultimately drive gold, not war news. Now, to some extent, you can say, well, war news could be inflationary. Well, it could be, because it's another government expenditure or whatever. But it's hardly the driving force behind gold. Therefore, to say I'm going to dump half my position because gold wasn't up 30 to 50 today, instead it was up 20 and closed up like 10, he said something's wrong. Well, I beg to differ. I think that was a bad judgment call. I also hear from other people who are still skeptical on gold, though presumably prior to that bullish on it. Elliott Wave folks are talking about, and they're even deviating from their own little religion, because they're quoting the Commitment of Traders reports. What that has to do with Elliott Waves, I don't know, but apparently they see a gross imbalance there between the commercials and the speculators. Well, I also have some experience in that regard. When I was first at Hutton, I was at the metals desk where they handled hedge accounts, primarily in the copper industry. And I recall there was a major copper top, a bull market in the mid-'70s, where copper was exploding at the tail end, like a lot of bull markets explode. And usually that's because of somebody who's excessively short getting blown out of his position. They're narrowed in on one guy. Well, in fact, it was one guy. It was a customer of ours at Hutton who was a commercial in the copper business. Okay? He was on the production side. He not only was short for hedging purposes, but he went overly short because he thought the price was excessively high. Well, they stuck it to him. And he printed the last 20 cents of the upside in that copper bull market as his firm almost collapsed. So the wisdom of commercials, perceived wisdom of commercials, is not always there. They're not always smarter than the speculators. That's the first assumption. The second thing is, a lot of the commercials in some of these markets, let's say in the gold market, are in fact not net short gold. They're hedged. So when you go in, if you're the CFTC and you count up all these folks in the commercial side who are short, quote unquote, I don't think they actually went into their bank balance and corporate balance sheet in terms of their hedging participation, and that these short positions are actually offset by bullion positions that are underground about to come out or already above ground that they just mined. So it's not the same as being short. Right. And anyway, so taking a contrary opinion view and panicking about gold, our view on gold has been this. 2.5 weeks ago, we said, if you want to take a profit and you feel compelled, at least now, by reaching 1550 gold and getting over 18 on silver, there's some justification for a correction or congestion. And in fact, that's what we've had.
We're getting a congestion.
Yeah, we got into congestion. It's fumbling around in the 1500, 1550 zone or high 1400s, but it's fumbling around. It's not dynamic downside. It's fumbling around, wasting time. In fact, our metrics show that we're now 7 weeks off of the oscillator high on gold, on a weekly oscillator, which is very aged, and we're trading at 1504. We came on the radio on October Gold, the front month, which is all of $20 below the highest weekly close of the move. So
So
okay,
what are you gonna what are you gonna gain at 1550? What are you gonna gain going short or getting out?
Anybody who shorted gold, all those number of weeks ago, and they're fumbling around. There's no downside here. It's congestion.
Yeah.
So our view is, if you get through this week and you find gold is numb, right now it's up $10 on the week. It closed 1493.80, I think, or 60 last week. And you find a numb week here where gold is steady. Assume that the bears have had their shot. They've tried it repeatedly. They even had a failure in the rally on the oil news. I don't think it was, but you can interpret it that way. And they still can't get it going down.
Yeah.
Okay.
Yeah. Very good point, Michael. Let me just ask you, because we're almost out of time here.
Okay.
I see some people in terms of price for gold, 1450 would be sort of a challenging area. From your momentum areas, do you see that? If we saw something like 1450, would that scare you?
I can't see any long-term negative structures on gold. In other words, when we broke out in gold upside, there were positive momentum structures that were overcome. There were ceilings on the momentum charts that were blown out. When I look on the momentum charts now on anything long-term, there are no structures below to break. And normally you can't break a trend unless there is something to break. So our view is any pullback will be a benign pullback or will be brief, and then the upside will resume. And we still think that the minimum upside for this particular surge, likely to be seen before year-end, is at least $1,700. And I think if we get through this week with a yawn, assume that's what it was, a yawn.
Okay. All right. Well, I would like to very much ask you, you made some comparisons of the current equity market with that of 1929 and 1987 in your weekend MSA 360 report. We don't have time, but that is the kind of thing that we'd love to talk to you about, and that's the kind of thing that people who subscribe to your letter will know about. Fascinating read, that's for sure. So, folks, it's OliverMSA.com, OliverMSA.com. We talked to Michael mostly. He talks to us mostly about the precious metals markets, a few other things, but he covers a huge number of markets from his very unique proprietary momentum structure analysis that I've found to be as good as anything I've ever subscribed to. So thank you, Michael, again for being with us, and I will miss you next week because we're going to be pre-recording the show. I'll be in Portugal with my wife, but the following week then hopefully we'll have you back, and by then, who knows, gold could be a lot higher than it is now.